The global media and technology platform SEEEN has raised approximately £750,000 after a warrants exercise. For more details, I'm delighted to be joined by the Chief Executive, Adrian Hargrave. So, Adrian, 70% of your warrant holders have exercised their warrants with more than 1 year to go to maturity. So, what does that say about their belief in your company?
Thank you, Sarah. And yes, I think this is a pretty unique situation, and it shows that our shareholders who took part in the fundraising last year have a clear belief in our strategy and our plan as a company. And they've seen significant progress since our fundraising just under a year ago. Normally, you see these warrant exercises happen when there's been a share price spike. And actually, here, the warrant holders are exercising when the shares are roughly the level of the exercise price, which means that they want to buy and hold on to their shares rather than selling them into the market, and shows their belief both in our short and long term fundamentals.
Okay, so you mentioned the company's progress there. So, what does progress entail?
So, since our fundraising last year, we've made several announcements, both in terms of new client wins, but also probably more significantly for shareholders in terms of our financials. For example, in 2024, we delivered 50% revenue growth versus 23. We've crossed over into cash flow break even. And obviously, we've been doing this whilst accelerating the sales of our technology products, which really should transform the valuation of the business overall as we continue to increase the margins of the group.
Okay, £750,000, give or take. Now, surely that is a transformative amount. So, therefore, what will the money be used for?
Yes, this adds to our existing cash reserves. So I think we announced at the back end of 24 we had over $1 million of cash in the bank already. This really just provides us with the additional flexibility to both attack the market a bit more aggressively. I mean, we can't go too crazy. We've got 750,000, which we can use to spend on some extra salespeople and potentially to deliver a bit more on the sales and marketing front to capitalize on our case studies. But we could also use this money to pay back the debt that we have in the business, which is quite expensive, and potentially use that to accelerate the business through inorganic routes, such as using joint ventures, partnerships, and potentially even beginning to look at one or two acquisitions as the share price gets to a more reasonable level.
I like that phrase, attacking the market. It sounds rather feisty, Adrian. But how does this funding affect your financial profile going forward?
This funding really adds to our cash position. It really means that we're fully funded to develop the business as we see or as the board sees appropriate. And having moved over into cash flow break even at the back of 2024, it means that we could actually choose where to invest our resources to optimize our capital structure, to optimize our delivery. And this means that with a stronger balance sheet and potentially in the position to repay the debt that we have, we don't need to come to the market again for additional equity resources. And this obviously is important, both because investors want to know that the share price hopefully will continue to rise and reflect our fundamentals, but also because it means that we're now in a position that we have a strong, committed shareholder base who, if we did need to do something to look at potential acquisitions, would be in a position to support us much more proactively.
So, is optimization going to define this coming quarter? What do investors have to look forward to in the near-term future?
So in the next month, on its own, in June, we're going to be attending Mello in Chiswick next week, where lots of shareholders or prospective shareholders can come and meet us and learn more about the company. And again, we're trying to be more proactive about that and get in front of people. We're also going to be releasing our audited financials, which will reiterate the 50% growth that we achieved in 2024. Those are quite important in their own right. But then we're also obviously looking to close new sales and partnerships of significant size and scale, which we'll be able to deliver significant announceable news flow to the market. Obviously, that is a lot less predictable, but we see the pipeline. The pipeline has always been there, but actually, with the case studies that we have now, we're in a position to sign some of these deals and hopefully give our shareholders more exciting news to follow.
Great. Lots of upbeat answers there. Adrian Hargrave, Chief Executive of SEEN, thank you very much indeed for joining us on what is a very upbeat day. Thank you.
Thank you, Sarah.